Hello, and thank you all for joining us today for this second webinar in the series hosted by NatWest Rapid Cash. And my name is Julie Ashmore. I'm joined by two guests today who I'll introduce to you shortly. We're going to be exploring the topic of cash flow, which we know is the lifeblood of every business. So first, let me introduce our guests. So we have Kevin McCallum. Hello, Kevin. Kevin is the Chief Commercial Officer for FreeAgent, which is award-winning cloud accounting software for small businesses and accountants. He began his career in Bank of Scotland, moving into the accounting software industry some 16 years ago. He's responsible for the company's key partner channels. And we've also got Mark Raddan from KPMG. He's the Global Head of Working Capital, and he's got over 20 years experience working with businesses and private equity sponsors in a wide range of situations from post-deal and portfolio to crisis management. Welcome, both of you. Thank you for joining. I'd just like to go through our session structure in terms of what we're going to cover. It's going to be in two parts. The first, I'll be asking our guests some questions, and we'll be 20-25 minutes going through some discussion. And then the second part will be really where we'll come to the audience, to you. So if you've got any questions, please, you can, through the comments, submit those, and we'll answer as many of them as we can in the second part of the session today. So I'm going to begin with you, Mark. First of all, thank you for being here. Thank you for joining us. It's been a really tough year for businesses so far. As we look further ahead in the new year, what kind of trends do you think we are likely to see in the UK?
Yeah, Julie, absolutely. A very unprecedented year. And I guess what's really struck me is that the trends have changed a number of times, even through the course of this year. You know, from early on in lockdown, then everything being about sort of accessing liquidity and building as much of a cash buffer as possible to ride out the crisis for however long it might last, to now looking at a slightly more coordinated approach. And what I'm seeing is that on payables, there's very much a consensual based move to extend payable terms. That links with the legislation around duty to report that businesses are having to make sure they don't have high late payments, given that's now very transparent in the UK. And the flip side of that, of course, is trying to reduce the amount of late payments you have on from customers, so driving down the overdue receivables statistics, so businesses at least have predictability of cash, even if overall the terms are extending. And then if I complete that picture with what I'm seeing on inventory is being addressed much more as part of the commercial and supply chain strategy of businesses, and you know, facing into all of those changes in consumer demands and supply chains in a sort of COVID world, and having to change that to adapt really quickly to a very volatile world.
Thank you, Mark. So to you, Kevin, thank you again for being here today. So I've already said that cash flow is the lifeblood of business, and Mark's touched on, you know, a couple of pieces there with regards to the unprecedented times that we've been, all been living through. Why do you think at the moment, at the current time, cash flow is so important for businesses?
Yeah, I think as everybody says, and it's it doesn't really need to go stated that unpredictability is the one thing that we've kind of got in front of us. I mean, it's always been the case that businesses, particularly small businesses, should have a good handle on what the cash flow in their business. I mean, it is a bit of a cliche to say cash is king, but it is true in terms of how you can pay your supplier. So I think this having a clear idea of what is going to happen in these difficult times is just even more fundamental, and being able to actually have plans about how you're going to act and react when it comes to the kind of different things that's going to be thrown your way going forward in these side of things. As Mark said, it's important that if you do see challenges, is also to speak to the parties you're dealing with. Speak to your suppliers, speak to your landlords, whoever it might be that you've actually got challenges in these things. But having a really strong understanding of your cash position is more important than it ever was, Julie, because it just this kind of lack of what's going to happen. Nobody's got a crystal ball, and even on a local level, things can change quite rapidly. So being prepared for all eventualities is more important than it ever has been.
Yeah, and thank you, Kevin. You mentioned at a local level, what do you think, businesses should be thinking about as we continue to ease out of lockdown nationally? But of course, we are also seeing some local lockdowns. So what are the sort of things you think they should be considering right now?
Yeah, I think it's having have a plan first and foremost, but in reality, you probably need to have multiple plans. There's a bunch of different ways this is going to play out, as we all know, and we see every day on the news, sadly, in these. There's an interesting aspect to this, so Julie, isn't there, about different industries have been affected in different ways. And the kind of customer and consumer behavior, which ultimately is, where the income comes from business that drives the cash stuff, varies depending on the industry you're in. If retail is obviously in hospitality is one area that's very, very badly affected, but a lot of businesses in the service industry are not unaffected entirely, but they can carry on in the same way as they were. And I think, as Mark said, things like protection on late payment and kind of other kind of forces and that are going to be playing into that to kind of support businesses. But I think it's having these multiple plans as to what could happen based on multiple scenarios, building up what not so much buffers necessarily, but kind of having a contingency for other things that might happen is kind of going to be quite important. And there's multiple places to go for advice, for guidance, for help, and even for funding, and make sure that you understand all of those aspects that are open to you and that are available to you.
Yeah, thank you, Kevin. I just want to pick up on one of the points you made there, which is around different sectors have been impacted differently, and VAT. One sector which has been impacted very, very severely is the hospitality sector, and VAT has recently been reduced for some businesses in that sector. What impact? I'm sure it's a very, very well received move. But what impact would you say that will have on those businesses and their cash flow?
Yeah, I think that generally the government support, and Mark might have a view on this more about policy and stuff, that at a government level is well received, and it's we haven't seen this stuff before, so we don't know what effect this is going to have necessarily on that. I think that the VAT side is, well, two aspects to that, Julie. One is how you actually apply that stuff. So the thing is about, you'd expect somebody who works for an accounting software provider to talk about, making VAT simple and actually running your finances in a kind of simple way. And that is a key component, undoubtedly, is making sure that you have the right tools in place to allow you to take advantage of these things and not confuse and complicate an already quite complicated manner. So I think that's well received. That helps only insofar as there's still inputs and outputs from the business, money coming in and money going out. And if your business drops off because nobody's actually using your service, that's not going to in itself be a huge benefit if you're still closed from that point of view. I think what we have seen, and we hear from our customers quite directly, is actually in the retail and hospitality side in particular, the hospitality side in particular, is the Eat Out to Help Out program. And I think I saw that there was 64 million times that had been used in the last 3 weeks as a function where you get paid half of the money comes back on that side of things. So, we've seen, quite a lot of businesses affected more by that and supported a lot more by that initiative than necessarily the kind of VAT side of things. But I think the other point is to not be dependent as much as you can. And that's simple to say, but it's to plan for these things not being there, because that is another point of these things, is that they can't go on forever, these support mechanisms and government schemes in that side. It's important to kind of think what might happen as and when they're not available to businesses. So I think it will be interesting to see how that kind of plays out over the next while.
Yeah, indeed. Just before I go on to the next question, I'm going to come to you, Mark. Just a reminder, anyone who's listening who does have a question to pose to our panelists, please do, through whichever channel you're watching, please do submit a question, and we'll do our best to answer it in the second part of this session. So, Mark, I'm going to come to you. we're a nation of entrepreneurs, and it's been quite incredible some of the examples that I've seen at NatWest Rapid Cash, where our customers have innovated and changed their business model. Because let's remember, it's not just COVID that businesses have had to contend with, but we're also leaving the EU at the end of this year. So from your perspective, what are we seeing, and is there anything around cash and working capital that businesses should be considering when they are thinking about adapting their business model?
Yeah, absolutely. Look, if ever there was a time to think radically about how you can reset the working capital model of your business, then with Brexit and COVID, then now is definitely the time. And I think actually, I'm fortunate enough to work with businesses of all sizes and around the world, and that sort of speed and agility is something you definitely see within smaller businesses in abundance. And part of the challenge for larger businesses is actually keeping some of that speed and agility to react as you grow. So in terms of working capital and business model, I think this is all about sustainability. So the more you can have a working capital model that isn't dependent on large amounts of capital, isn't going to soak up lots of cash as you grow, given that's what everyone's will be trying to do, then the more resilient you are in these segments. So thinking about how you could get to neutrality in working capital, balance your current assets and your current liabilities, whether that's purely with your customers and suppliers, or whether that has some elements of financing within it as well. But either way, getting to that balance is likely to give you resilient business going forward, able to balance out the peaks and troughs. Because actually, in the irony in a lockdown scenario is if you have negative working capital, i.e. you're funding from your net funding from your suppliers, when that unwinds, you have a cash flow gap. If you have positive working capital, as that unwinds, it's actually a cash inflow. So it's counterintuitive in that way. So the simple answer is to think about your working capital model as being as close to being in balance as possible. Then you're in a good place. And I think the chance to really rethink and reset at this time, as you come out of what's the biggest kind of lockdown or shutdown that any business has probably ever gone through, is that. And I think those that think radically and innovatively will be in a good position to thrive in whatever market comes our way beyond this.
Julie, on that, if I could maybe just come in on that as well, I think that Mark makes excellent points there, and I think the other thing that's available to small businesses these days, because a lot of this thinking around working capital, for small businesses, they might see the kind of funding these things on personal credit cards or something as a very short-term kind of gap on the side of these things. And I think, Mark, you might agree that's a very expensive way to fund your business, to do these kind of bits and pieces on the personal kind of side of things. But if it's a small gap for a small period of time, it can sometimes feel attractive to do that. But going back to some of the points we were making earlier about innovation and understanding your business as best you can in these kind of difficult times, there are so many changes in the last 2, 3, 4 years around the services that are available to kind of understand your business better. Things like open banking now has meant that you can actually get a lot of products and services that can actually understand your business much better than you trying to work out an Excel spreadsheet, for what you want to do from a forecasting point of view, and actually do this stuff automatically and serve this stuff up to you, at the time you need these things. So I think there's a real technology angle to that stuff. Again, I'm kind of biased on that side of things, but I do think it's a good time now to investigate your options around these things and understand what options are available to you. There are specific tools out there, depending on how sophisticated you want to be, around forecasting and cash flow horizon stuff, without question, that plug in multiple things and you can play about with those bits and pieces. We've also got spreadsheets and stuff that NatWest make available to customers, as you know, Julie, that to help people plan on those kind of bits and pieces. But then also how that connects into kind of funding options and the different things that are available to in 2020 that wouldn't have been available to people in 2014, 2016, 2018 necessarily, other products and services that support that. So I think Mark's absolutely right. And also for very small businesses, there's probably more of a breadth of support and capability out there that can help you do exactly what Mark said.
Thank you, Kevin. Thanks, Mark. I'm keen to sort of explore some practical examples of what can small businesses do. So I think, Mark, you said sort of balance the books. So if they've got, you talked about cash inflow and cash outflow. If they do find themselves in a negative situation, which clearly, is not going to be sustainable in the long term, what are some of the practical things that small businesses can be thinking of doing to actually help balance that? Mark, do you want to begin answering that?
Great. So I think, as Kevin mentioned, there are some innovative technologies out there. So, for example, some of the dynamic discounting platforms where you can, on an invoice-by-invoice basis, sort of get early payment through bidding a level of discount, are an interesting and flexible way of accessing funding. It's often the seasonality or the short-term peaks and troughs that are the biggest challenge for businesses, and therefore those things that you don't have to enter into financing, long-term financing that's fixed, but you can use tactically when you've got a gap in your cash flow, are very helpful to smaller businesses. I'd also think though about it's a lot of this thinking is not necessarily new. If you think about this in a context of return on capital employed, then thinking about which assets you need to own and which you might be able to lease or to borrow, rent, is a sort of capital light strategy that is both an old idea, but also one associated with new economy businesses as well. So thinking very hard about what capital assets do you really need to have and tie up capital on, and how lean can you be on that, and how can you find different ways of working with other organizations. So, for example, one of my clients was looking at, it had a particular piece of plant and machinery only used for about 2 months a year. It was looking at whether it could put it in some kind of SPV and therefore rent it out to other organizations the rest of the time. So rather than everyone having a big capital item on the balance sheet, just using it when they needed it, rather than having it sitting there as sort of lazy capital through the year.
Yeah, so a lot of cash can be tied up in assets, including stock. Think about the stock levels. How much do you really need to hold? Kevin, did you have anything you wanted to add on that? Otherwise, I'll move on.
Yeah, no, I think the asset stuff is interesting, and it's worth, your invoices are assets at the end of the day as well. And that's another point about kind of direct funding for, working capital and on those sides of things. So I think that, as Mark said, that and as I touched on, there's quite a lot of other kind of innovation going around these kind of fintech space, and things that can go on that. I think the other point would be, there's a lot of stuff out there, there's a lot of guidance out there, there's a lot of information out there, but, do speak to people who know about this stuff. Speak to your bank, speak to people who are in the same kind of position as you, because always understanding this stuff is, as much knowing about it and understanding it are sometimes two different things, because some of this stuff can look a bit scary on the front of it, but really when you get behind it, it's normally quite straightforward as to what's going on in there. But go into this with your eyes open as well, and you've got to know if it's some kind of financing facility, whatever, where the security lies, and those kind of aspects of it is a kind of key component to your understanding of what you might want to be taking on.
Okay, thank you. We've touched a little bit on working capital type facilities, what could be available to support businesses. But if we take the last sort of 5-6 months, the market has really been dominated by the government schemes, which have been a significantly important source of funds for businesses. But they are starting to come to an end. They can't go on indefinitely. So what would each of you say to small businesses who may or may not have taken out one of these outback loans or similar? What should they be thinking about now as the schemes are starting to come to a close? Kevin, do you want to start with that?
Yeah, I think to some extent it's the scenario planning that is really, really important in this side of things. You can't put your head in the sand with this stuff. That's the worst thing that can possibly happen with this, and it's quite difficult to kind of predict. I know from conversations with some of our customers, some people have been a bit concerned about even the government schemes, because it's still debt at the end of the day. Still taking debt onto the business, and whilst it can be the only option or the only kind of viable option out there. And I know a lot of the large banks and other providers have made great pains to kind of point out this is not personal guarantees, it's not, you know, your house isn't at stake and these kind of bits and pieces, but it is still debt for the business. So I think some people have been cautious on those side of things, but there is a range of outcomes that we're going to have depending, as we've said, what industry you're in, what comes back with customers. There might be longer periods of time that that we go back into lockdown on a kind of a small basis. So as Mark said, that there are a bunch of other things out there that you can look at in terms of what options are open to you from the business point of view, from an asset that you might have that you could potentially lend on that stuff. But as I've said, you know, really kind of explore what other options are out there in terms of different kind of lending that might be suitable for your business, because there's multiple choices out there. But, you know, do take advice, do take guidance, you know, on this stuff. You're not alone in this stuff, and that's an important aspect to kind of point at people.
Yeah, I think that's a really important point. You know, use advisors. I'll be coming towards the end. There's some advice and support available from the NatWest group, as you would expect. But I'll touch on that at the end. But there is a lot of advice and help and support for businesses, and the comments saying, you know, you're not alone. I think that's really important, because it can feel very lonely right now. Thank you, Kevin. Mark, was there anything you wanted to add on that?
Yeah, I absolutely agree with Kevin's point. I would just add that I think this is a lot of businesses will be going through, you know, turnarounds effectively, coming out of the impact of this. In turnarounds, then there's always a stabilization phase, and then before you get back to restoring value. And I think at the moment, given none of us really know what the shape of this is going to be yet, and to the point about different scenarios or further lockdowns, it's still about maximizing your access to capital. So first, and then, you know, so understand the maximum debt capacity of the business. Obviously, hopefully not having to draw on that fully, but that still gives you the most resilience, you know, access to sources of capital. And then having a second phase, which is about how you pay down that debt, how you generate cash from the business. So think about that working capital model, how you pay down that debt to get back to a lower risk level of debt in the business and being less dependent on that. But for the moment, I think we've still got to accept that, you know, survival and resilience is going to be about having maximum access to that capital. And then hopefully, as we come out of the other side, we can go through the deleveraging cycle that I guess a lot of businesses saw coming out of the global financial crisis, you know, the best part of 10 years ago now.
I think the other bit on that, Julie, we talk about advice and guidance that's available to you, and particularly for small businesses, sometimes it's difficult to have distance and perspective on how your business stands and what's happening with your business. If you do have an accountant that you rely on, then there right now, obviously Mark is representing the accounting community at some point, but not everybody uses KPMG. I mean, maybe they should, but I think that they're a great place to go, because some of this language is for particularly smaller businesses, and some of the kind of ways that these things operate can be a bit difficult to kind of get behind on these bits and pieces. But I think that perspective of, you know, realistically, because there's an emotional aspect to this, particularly if it's your business that you've started and you've been running for such a period of time, and you're invested in that in all meanings of that word, then it's important to have somebody who can actually give you perspective. As Mark said, debt is still going to have to be repaid at some point. It is important that you sustain, and we can, you know, work through where we are now and where we want to be from that point of view. But, you know, it's not a handout. You know, this is something that is important, you know, that people understand. In saying that, there are grants available, and that's another thing to kind of really get to, you know, is the fact that there are at a more local level and even government level, there are grants, which is not debt. You know, that's the ways of keeping these things up. So there's quite a lot of information, Julie, as you referenced, you know, that is available to people to find out on that. So spend the time to understand that stuff, but get perspective. It is easy to kind of like get into tunnel vision with these kind of bits and pieces, and having, you know, somebody who's more experienced or more outside your own business is a kind of key component as well.
Yeah, so thank you, Kevin. So I get the message there that don't be too proud to ask for help and support. It may be your baby, but, you know, do take the time out and, you know, to get that help and assistance. And yeah, that is really, really important point to make. So just a reminder who are watching, please do get your questions in, join the conversation. We do have some pre-submitted questions that I think we're going to come to now, Mark and Kevin. So if we could have just the first one, that will be great. Hopefully it's going to pop up for us to answer. So businesses need cash more than ever since the bounce back loan scheme was launched, which we've already touched upon. Over 30 billion has been lent. Is taking out debt a sensible move? What other options are there? So we've touched on this a little bit so far, but I'm sure there's some more points that we can bring out. Who would like to tackle that question first? Neither of you. Mark. Or Kevin, you look like you're about to jump in.
Both too polite, clearly.
Yeah, that's not normally a problem, being too polite. I always look like I'm going to say something, Julie, so I've just got one of those faces. I think we have touched on a few aspects to this. So I think it is this servicing component, which is a kind of key element, and that's where this planning comes in. So subject to what happens, and we don't know at the moment whether customers are, where they're going to come back. And we've seen some early signs on the high street, come back around, for example, from a retail point of view. Children back at school, genuinely things like that have a bearing on that. And until we know how the kind of, I'm going to use another cliche, apologies, Julie, new normal is in these bits and pieces, what that actually looks like, it is going to be quite tricky to encapsulate that. But things like, furlough scheme and stuff like that has helped people kind of maintain a lot of the kind of resources that they need to have to fulfill their business as and when these things come out. So I think options out there, Mark touched on, there are other particularly asset-based lending facilities out there in there. I think they would be the ones that would probably be most certainly worthy of consideration for a lot of businesses, because that is avoiding you kind of taking on just loading on more and more on the business without having some kind of clear way of where that's actually going to be kind of covered from. So I think that there's definitely value in investigating those in more detail.
Okay, Mark, anything else to add?
Yeah, I think if you go beyond debt, and obviously thinking about equity investors, I suspect there'll be a degree of consolidation in certain segments, even in small businesses coming out of this, and that businesses may have to partner or form alliances or even merge to manage their way through this, but can potentially come out in a stronger competitive position in their segment, particularly in kind of new economy businesses where you're in kind of evolving areas and those technology or dominant models are happening all the time. So I think got to think broadly. Might be left field options of where businesses you thought of as competitors suddenly become friends, and that part of the way through this is to combine and work through it. I certainly think that will be a trend of who comes out of this in the best position. Some of those will be through combinations.
The other thing on that, Julie, is we saw this, and you'll know this, is from 10 years ago or 12 years ago. Actually, one of the things that came out of the previous financial crash was a massive spike in entrepreneurialism, and actually the number of businesses that are coming to, so as Mark suggests, and we know that's something that organizations like NatWest are going to play a really central role in, because there is, how do you actually, particularly if there are kind of spikes in unemployment from larger employers, because we're seeing a lot of news around those kind of bits and pieces, is actually, once things kind of balance out a bit from that point of view, there actually will be quite a rise in new startup businesses and people kind of setting up, and that will kind of shift to some extent, the way that people, they earn a living, is going to be potentially kind of a shift even down in terms of smaller businesses that are out there. And that in itself is sometimes a bit of a vitamin injection to the economy, because that kind of brings in a lot of innovation and a lot of kind of new thinking and capability and even competition to some extent. And you hesitate to kind of say that that's a good thing given the circumstance it's in there, but it's certainly something that we're anticipating, as part of NatWest, as you know, Julie, that we're investing very heavily in supporting people look to start up a business, and the kind of all the kind of attendant stuff that goes along with that as well. So, and as Mark says, this new the new industries and the new tech stuff, that you can do, because actually we've just proven over the last 6 months that people can function quite well over a video. We're doing it right now, so we're not in the same place. So actually there's a lot of products and services, and you're seeing even new platforms popping up that I read about one this morning that's making personal trainers, a platform for putting personal trainers doing video calls for their sessions. Obviously, I don't need one, but I think from that point of view, in terms of actually brokering the kind of relationship between these people. So these are the kind of things that are actually going to kind of start bubbling up, that are going to allow and support people to kind of get back into employment and their own business, or themselves as a business, over the next few years. So I think it'll be interesting to see, exactly how that bit of it plays out.
Just you've triggered a thought there. I think again, most of these principles are good old fundamentals of business, but thinking hard about your cost base and your fixed cost base has never been more important here. So your operational gearing and any of these technologies that reduce your fixed costs and or your cost of the business, again, going to make businesses more resilient and therefore probably need less debt. So I've seen a number of clients really reset their cost base coming out of this, and that will undoubtedly make them more resilient, whatever lies ahead. And whether that's using technology or changing ways of working, then who knows how much business travel will come back, who knows how much office working will come back out of this. All these things have changed. We're going to change more in 6 months than probably in the previous 5 or 10 years. So again, it's back to that speed and agility of thought that hopefully is always a key attribute of smaller businesses, and therefore will give the best chance of being successful out of a difficult environment.
Yeah, I think that's really interesting. I mean, one of the points to make is, Kevin, we like cliches, don't we? But out of adversity comes opportunity, and I think it's quite incredible how businesses have evolved, to survive in these very, very difficult times. The point I just want to explore in a little bit more detail is around, we've touched on technology, your example of personal trainers using software to still continue to deliver sessions to people. Not you, Kevin, as you said, you don't need it, but to me and maybe others. Do you see, so I know there's been some commentary on this within the press, do you see an increase in the sort of the digitization, so more and more small businesses using digital products and services, given potentially in lockdown there was no choice, so the switch, for example, from cash to online payments is a good example, but do you see that trend continuing as we move forward?
Yeah, there's a bunch of kind of macro forces on there as well, Julie, as you know, around things like making tax digital, which is in play even prior to this recent set of circumstances, which was moving a lot of people to doing things online, whether it's their tax filing or their accounts or just generally invoicing and just managing their businesses and all the different products and services. The second phase of that stuff is kicking in over the next couple of years, where even smaller businesses than the VAT threshold are going to have to submit their tax returns to HMRC online. I happen to know that we're involved at FreeAgent in an organisation that's kind of tracking a lot of the data from what's happening in the wider economy. So we're feeding into that, as are a bunch of the banks, around what we're seeing, and we're wanting the kind of pre and post kind of impact on the economy. And the thing is, we can now do that stuff programmatically on a very anonymized basis. No customers' data, it's all very anonymized, but we can track the kind of the cash balances and the kind of transaction volumes and stuff that very directly, and pinpoint what's actually going on in the wider economy. So the more people that actually adopt these kind of technologies, the better the collective understanding of what's going on in the market is. And I happen to know that that there are a lot of people in government and parts broader than that are really interested in leaning into this stuff to understand that the support that they are actually investing in is having the required effect. So there's a feedback loop that goes on in these kind of bits and pieces. And the thing that supports all of that is this move to digitization, move to mobile, move to using online tools. So we're already seeing that, a very high proportion of businesses are now using either online accounting or online invoicing or online bookkeeping, and even connecting their bank account information, because that's ultimately what accounting is. It's money in and out of the business. No offense, Mark, but it's ultimately, knowing what the kind of the ins and outs that go on in these bits and pieces. Also, I've seen reporting just recently, Julie, I think you may be referencing, is that the number of online payments, cash is in the sense of physical pounds and coins and stuff like that is obviously having a bit of a kind of shift to the side, with contactless levels going up and Apple Pay and all these kind of interesting technologies. But even automatic initiation of payments and stuff like that has gone up, I think 6 times or something like that, in the course of the lockdown as well. So definitely the adoption of these kind of new capabilities and digitization is being given a acceleration through one, a necessity, that really for people to actually continue to operate is in there. So, and I think that won't stop even when things kind of plateau in terms of business, because, a lot of people have realized they can actually work from home quite efficiently. Thank you very much. And, whilst that will have an effect on, the amount of people that maybe, driving into London on a daily basis, it will be probably better overall for people's, kind of well-being and work-life balances and these kind of bits and pieces. So it doesn't detract, it just enhances. So I think we'll see that continuing to kind of, the adoption of these kind of tools definitely continue to rise over the next while.
Okay, thank you, Kevin. We've had a question come in from Nick Gregory, which I'm hoping we can get. It's quite a long one, but I'll just go through it. And Mark, I'm going to come to you, so get ready to answer it. So most business owners will have a tried and tested cash flow document before COVID hit. We're all learning as we go here, and as we've been saying. But have either of you found a version 2 cash flow that is more appropriate to the climate, or would a simple buffer on top still suffice? Mark.
Thanks, Gina. It's an excellent question. I think we've talked a lot about technology this afternoon, but one of the most stubborn tools of business that stayed largely in Excel over the 20+ years I've been doing this is the cash flow forecast. And I think what I've been saying for a long while, and what we found more than ever coming into this, is a lot of businesses had not put the focus on their receipts and payments cash forecasting over the last few years, as the global financial crisis became more of a distant memory, and that was exposed in a lot of cases where organizations didn't have good enough visibility of cash. Is there a version 2.0? I think it's probably if it is, it's an evolution. What I've been saying to businesses of all sizes is that focus on the receipts and payments cash forecast rather than your accounting cash flow or funds flow, because, as Kevin said, it's cash in and cash out. That's not going to lie to you. And if it was a slight COVID angle to that, or even Brexit, it was probably just extending it out a little bit further, depending on the nature of your business and how short term or long term the demand is, the lead times are. Then the new 13 weeks might be 17 or 26 weeks, so you've got further visibility. And then the second thing that I spend a lot of time adding to cash flow forecasts plays to that scenarios point, that no one quite knows what scenarios are going to play out. So if you can have a kind of risks and opportunities roadmap below the headroom in your forecast, and think about what might some of the risks be and what would that do to your available headroom, and show that. So show this is to the buffer point. If you've still got headroom after those risks have crystallized, then you're in pretty good shape and you've probably got a good enough buffer. But make sure you understand what the mitigations that you could take, right through to the most drastic and uncomfortable ones that you could take, to give yourself some extra buffer if you need it to withstand the sharpest of shocks. And then keep that updated on a weekly basis to see how it's evolving, whether any of those risks are crystallizing, and if they are, whether you need to trigger some of those mitigations to keep the headroom above that buffer level of whatever level it is that you set that at.
Julie, can I ask Mark actually, just from his opinion on that? Because one of the things we've seen work quite effectively for, and our customers are predominantly on the smaller side of the sort of 1 to 10 to 20 employee size of businesses. So very much the S of the SME. Things like actually implementing direct debit as a payment method rather than kind of traditional invoice, finance, or even some of the kind of, again, my interest in this is quite technology and not digitization and stuff like that. But we've seen that improve debtor days, and the kind of speed that they can get paid on quite significantly, even to the point where it's worth sometimes offering incentives for your customers to move on to those kind of payment methods. And would you advocate that as as a means of kind of improving that?
Yeah, I'm a huge advocate of direct debit even in a business to business environment, and I've certainly been pushing that with a lot of clients. I think if you think about it, those businesses that had high direct debit penetration coming into this were in good shape because the collections carried on by and large, and it also reduces the cost of the cost to serve, because all that time spent chasing and collecting invoices has a cost to it, an overhead. So I think direct debit is one of the things that will be, as there's not a new idea, direct debit, but I think the wider proliferation of direct debit into B2B is a trend, and I think it's a trend that will accelerate out of this crisis in particular.
Yeah, and it doesn't suit all industries and all businesses, obviously, but I think where it is appropriate or applicable, we certainly see a lot of advantages for our customers, who move on to that. And there are good services and packages out there that make it quite simple these days. So actually that in itself is not a complicated thing to set up, importantly.
Okay, thank you both. And thanks, Nick Gregory, for your question. I hope there's some useful answers for you there. Okay, we've got another question that's come in, this time via Facebook. Thank you, Direct Harris, for your question. As an entrepreneur who's looking to scale my business, what are your thoughts about GoFunding as a way to raise capital investment rather than the traditional route of borrow or the government schemes? Mark, do you want to begin with that one?
Yeah, I think as we've said, then this is all about remaining fleet of foot, and traditional sources of funding aren't necessarily the best, and I'd always encourage businesses to think about different sources of funding, whether however innovative that might be. That's classic. We answer a question when the doorbell goes, but so no, I'd encourage people to be open-minded about sources of funding. If there are new angles to that, then fantastic.
We actually, GoFunding is crowdfunding, isn't it? That we actually, as FreeAgent previously, we actually did a crowdfunding with 2015, 2016, I think it was, and it was an interesting process, definitely. And I think that it is a interesting way to raise equity for a business. There's quite a lot of effort in terms of your pitch and explaining this to customers, and it can be quite a crowded market, in terms of the other things that are out there to for people to kind of potentially invest in. The other thing that people from an investor point of view are quite interested in is what's in it for them, if you see what I mean. Because one thing actually putting a small amount of money, and a large number of people putting a small amount of money into a business is great, because you kind of spread that kind of risk and what's in there. But there's work to go into these kind of bits and pieces to make sure that you're presenting as good a kind of picture of what that is. And then after the investment is made, there's work thereafter in maintaining updates to your investors as well. So I think it's an interesting alternative, and a lot of businesses have done very well on it. It helps if you've got an existing customer base, fan base, social media following, and whatever that you might have in those bits and pieces as well, because otherwise it can be quite a lot of options out there for people to look at. So that's another thing to kind of factor into that. But as Mark said, I think the kind of alternative ways of raising funding are definitely worth investigating, given the circumstances we're in.
Okay, thank you both. And I wouldn't be doing my job well if I didn't mention, obviously, NatWest Rapid Cash. There are lots of alternative ways of funding business. We mentioned earlier that, invoices are an asset, and you can unlock vital funds from, there's various solutions, including NatWest Rapid Cash out there to actually help fund businesses, particularly growing businesses. So thank you, Direct, for your question. I think we've got some more coming through. So if we could have the next question, please. This is from Stacey. Thank you, Stacey. Hi, all. I'm looking to open a restaurant in a couple of months. Is this a bad idea, knowing how the economy is and that I will be new to the industry? There's an entrepreneur. Mark, do you want to take this?
Well, I guess on the positive, to be balanced on this, on the positive side, then food is a pretty resilient resilient industry to be in. Whatever happens, we'll all still eat. I think if you look at the challenges in the casual dining sector at the moment, and you think about some of what we've talked about in the last 45 minutes, is not difficult to understand why they've been challenges. It's mainly down to fixed costs. So, what I was saying about operational gearing. The challenges for restaurants was when they had to close in lockdown, they were left carrying most of the costs that they had. They weren't flexible in the cost base, and the biggest one is rent. So if you look at what's happening through retail and casual dining, there's a big shift towards turnover-based rent. So I think if you can set up a restaurant, the normal challenge in a restaurant is massive capital expenditure in setting it up that takes a number of years to pay back. If you can set up a restaurant in a modern kind of new economy way where you mitigate some of those fixed costs and setup costs, so you don't start from a long way in the negative, then why not? You've got strong demand. If you're in the right area, I'd think carefully about doing something that's differentiated, whether that's in I guess parts of that sector that are growing more, would be like in plant-based sector and so forth. So it needs to be different, I think, but also set it up in a way that doesn't give you big setup costs or high fixed costs. So think about your labor, think about your the premises and the kind of the refurbishments and things. In most restaurants, the problem is they have the setup is huge. So if you can find a way through that, then wish you every luck. And as I say, is at least a resilient basic human need to carry on eating and socializing.
Thank you, Mark. Kevin, was there anything you wanted to add?
Yeah, I think as Mark says, I mean, if given the social distancing and the amount of covers and tables that you could have in any restaurant at the moment, that, as Mark says, one of the challenges that a lot of restaurants, looking to reopen have faced is they're not going to cover the cost with what they can now fit in the space they have. So if your business plan and the kind of modeling that you've done, and your forecasts on these bits and pieces, then as and when things, as they, I'm sure, will come back to back round, then you could be in quite a good position, in these bits and pieces. But it's one of these eyes open things again, Julie, isn't it? You need to know that there is some headwinds in some different directions, that are going on in here. But I think it's definitely interesting, as you say. That's fantastic to see entrepreneurial spirit in these bits and pieces, because that's innovation. That's ambition. And I think we should applaud that. So I think it could be an interesting as things soften up in the future.
Well, thank you both, and all the best to you, Stacey. I hope that was useful for you. So just a quick time check. We've got sort of 6-7 minutes of discussion questions time left before we need to wrap it up. So if you do have a question for the panel, please do submit it through your comments from whatever platform you're watching through. Can we go to another pre-submitted question, please? Okay, so local lockdowns. So what would the impact be of local lockdowns, of which we've seen a few in the last few weeks, or indeed, dare we say, a second wave? What should businesses be considering for this? As we've talked a bit about planning, not really knowing what's coming down the line, but we do know this is a possibility. Mark, do you want to begin?
Yeah, no, it's a fascinating question. I guess having thought this through with some clients already, you need to think about different elements. One is supply. So if you're a manufacturing business, then say supplying, but then supplying nationally or even internationally, then one of the biggest impacts would be if your factory or if your supplier was in an area that was locked down, because then the supply of product ceases, and therefore it will impact further downstream. So that's I think thinking about whether the lockdown is on the supply side or in the demand or customer side of the business is one element. Thinking about modelling or thinking through those scenarios, whether it's a supply or a demand issue, is clearly one element of that. I guess secondly, if we're now all got some experience of this in the first time round. So the businesses that were hit hardest were the ones that had a large amount of stock perhaps perishable stock, and obviously high fixed costs without scalability. So anything you can do to go into this in a lean way, both on overhead and things like stock, is going to mitigate the impact of those lockdowns. So being is the opposite of Brexit in a way, because Brexit, people were largely thinking about how do you build buffer of stock and things to weather a storm. In a way, going into a lockdown, it's the opposite. You want to actually be as lean as possible going into it, so you can survive for as long through it as possible.
The other thing I'd add to that, Julie, if I may, is the people aspect to this. So depending on the nature of the business, you might have how reliant you are on your staff. So if a local lockdown, it means some of your staff might not be able to come to work, and others could. And this is this kind of like, a difficult one to plan for, if you see what I mean, in these bits and pieces. So there is something in here about if you have some, but maybe not all of your resources and people resources affected by these, how directly does that connect into what your ability to, still trade and to still, function as a business? So those kind of aspects of that, and depending on where that is, I'm not very far from a place called Cooper Angus, as I'm talking to you right now, which is currently on, there's a lot of kind of outbreak of bits and pieces going on over there, and that's affected a number of people. But it's a bit constrained. But if that goes much more beyond that, then that can start having a real effect on the local business community, just from a people point of view as much as a finance point of view.
Yeah, and Kevin, you reminded me of an old principle of lean manufacturing, where businesses made sure every employee could do more than one role. So that actually, if you can training here is a form of resilience. So if you can train your staff in small businesses to be able to do the role of one of their other colleagues or multiple roles, then if you have got people away from being ill or in quarantine, and people can combine different roles, then you're more resilient. And that's an old principle of kind of lean manufacturing from Toyota and so forth, is to have people play in different positions, which is very helpful in this context.
Yeah, and that also plays in beyond the local lockdown stuff into somebody happens to be on holiday in Trinidad and Tobago, much as that would be a great problem to have. That's just been added to the list of places you have to quarantine coming back from. Is it that employee's fault that they had a holiday booked in the Caribbean and they came back, or France or Portugal or wherever it might be? And I think having a clear conversation with your staff and your colleagues as to how this stuff will kind of play out if that comes to pass is kind of important as well, and be kind of transparent and upfront with your employees and your partners in that stuff.
Right. Okay. Conscious of time, I think we've got time for one more. I think we've got another pre-submitted question that's just come through. What does best practice cash forecasting look like for organisations in the current context? Kevin?
Yeah.
Sorry. Kevin, would you like to begin?
Yeah, I mean, I think it's probably the accountants amongst us might be more qualified. I'm not an accountant, but I mean, I'll let Mark come in on that with me, because I think my response in that is making sure that you've got your systems, your bookkeeping systems up to date, and where possible, use something that connects into your bank account. This technology is out there now, and that's the point of it, is you can get access to the current information for your business. And again, there's a lot of kind of places where you can find out information on how that all hangs together. So my answer to that would be, unsurprisingly, Julie, to rely on technology to kind of support you in that. But I'm sure Mark will have a much more informed and sophisticated response to that.
Please do, Mark.
No, complementary to that, I completely agree. But I think, as we touched on briefly before, I think in the short term, looking at receipts and payments forecasts, so cash in and cash out of the business, probably looking at that on a 17 or even 26-week basis to give you more visibility than you might have done without the COVID uncertainty. And then when you get outside of that period, looking at your accounting cash flow, so looking out, 3 years potentially, at least on a monthly or quarterly basis, but paying particular attention to those intra-month or mid-month low points in your cash flow, and thinking about how you can minimize those peaks and troughs. Those are the things that tend to cause businesses the most challenges. It's not the managing within their facilities all the way through the year. It's the particular pinch points that come up from whatever reason. So understanding those, the drivers of those, and how you might be able to mitigate them would be a really good thing to spend time. And then using the two forecasts together along with that sort of risks and opportunities roadmap I talked about to manage your cash flow is, if you do that, you won't go too far wrong.
It sounds like a very basic thing to say, but actually what we know is that there's quite a lot of businesses who don't factor in tax and VAT when there's a lot of kind of ins and outs and stuff like that. But if you don't, it's a kind of fundamental, and it's normally one of the kind of bigger obligations on the part of the business. So that's a big one. But as Mark said, there's lots and lots of things to consider when you're kind of building these kind of models to make sure you're in there. But having a model of that is sometimes difficult because it's a kind of predictive model and it's quite a complicated thing to calculate. But again, this is back to where something like technology or these kind of bits and pieces can help, give you a kind of more informed view of what's going on in there. But sage advice from Mark, definitely.
Right, okay, how time has flown. We're almost out of time. We've just got a few minutes left. So I'm going to come to each of you with just what would be your one sort of final comment to businesses who are considering how should they best master their cash flow as we move sort of through towards the end of 2020 and into next year. What's the one final thought you'd like to leave with them? Mark, would you like to go first?
Yeah, absolutely. I think to one point away, I think it's that that agility, that speed of thought, thinking the unthinkable. So thinking about different scenarios and understanding what levers you've got in the business to adapt to that, and thinking radically about that rather than being constrained by what's gone before. If you keep that in mind, then I think you'll be in the best possible shape to weather whatever comes our way over the coming months and years.
Kevin?
Yeah, I think I'm going to slightly steal 2 points. One is you're not alone. I think there's a lot of guidance, there's a lot of advice out there. That's a really kind of key point because it is a bit uncharted territory for a lot of people. But also, do look at your options when it comes to kind of systems that you can use and mechanisms that can improve that. So those are the 2 points I'd make, Julie.
Thank you. And final point I would make is, from what I'm hearing from both of you, it is all in the planning. There's a lot of uncertainty ahead, but the more we plan and consider different options when you're looking at the funding for your business, then you're going to be in a better position to take whatever does come at us as we go into the next few months. So thank you, Mark and Kevin, for both joining me today. Thank you to everybody out there for watching and for your questions. Just a quick reminder, there's lots more information available from the NatWest Group as well. If you search the NatWest Business Hub and look in particular for the cash flow toolkit, then there's plenty of tips and guidance and tools available there too. So thank you all very much for joining us, and enjoy the rest of your day.